The global financial landscape is reaching a critical inflection point. AI is no longer an experiment, it's the engine of modern finance. Today, we go beyond the hype to explore how silicon and software are redefining wealth, risk, and the very nature of markets. To understand where we're going, we have to look back at how we got here, the journey from scripts to self-learning agents. In the 70s and 80s, we lived in the era of rule-based systems, expert scripts that encoded human logic into deterministic code. These were static, they were transparent, yes, but they failed to adapt to the non-linear chaos of a volatile market regime. By the 90s, the statistical revolution took hold. Electronic networks provided the massive data sets needed for algorithmic trading to emerge. High-frequency trading took root, utilizing basic pattern recognition to exploit discrepancies lasting only milliseconds. The 2010s saw the shift to true machine learning. Quants began training models on historical data rather than just coding manual rules. Predictive analytics began scanning alternative data, everything from satellite imagery to social media sentiment. But in 2024, everything changed. We entered the era of generative AI and transformer-based financial models. By 2025, AI is estimated to handle nearly 89% of all trading volume worldwide, a fundamental shift in market power. We've moved toward agentic AI, autonomous systems that can reason and perform multi-step financial tasks without human intervention. The global AI trading market is projected to skyrocket from $140 billion to over $800 billion by 2030. This isn't just for small tech firms. Wall Street's elite are the primary architects of this new reality. Let's look at the giants. JP Morgan Chase invests over $17 billion in technology annually. Their centerpiece, an ecosystem called LOXM. LOXM uses reinforcement learning to execute equity trades at maximum speed, minimizing market impact for massive institutional stakes. Then there's Coin. It reviews loan agreements in seconds, a task that previously consumed 360,000 human legal hours every year. Goldman Sachs takes a different path, focusing on a firm-wide gateway for AI initiatives through their GSAI platform. By early 2025, they rolled out an AI assistant to 46,000 employees, increasing task efficiency by 15% across the firm. Their marquee platform now integrates machine learning for real-time risk measurement and predictive pricing on a global scale. The performance gap is widening. AI-native hedge funds achieved over 14% returns in 2025, crushing traditional quantitative models. This shift has altered the market itself. Correlation between stock prices and traditional macro indicators has dropped significantly. AI models are now making decisions based on micro patterns and non-traditional signals that are completely invisible to human observers. The result? Heightened intraday volatility. The market now reacts to information with a speed and ferocity never seen before. But this power brings a major challenge: the black box problem. If a model makes a trillion-dollar decision, we need to know why. Explainable AI, or XAI, is no longer optional. Regulators now demand a clear rationale for every trade and automated decision. The EU AI Act of 2024 has categorized automated trading as high risk, mandating strict transparency and human oversight. In 2025, the SEC and FCA have increased scrutiny to prevent systemic shocks caused by algorithmic herd behavior. Beyond software, there's a massive physical race. Firms invested $18 billion in AI infrastructure in 2025 alone. We're seeing an explosion in high-performance networking and advanced liquid cooling to keep these digital brains running at peak capacity. The workforce is changing too. Profits are rising even as back-office hiring slows, as AI takes over document processing and reporting. Looking ahead, we see the quantum AI convergence, using quantum simulations to model systemic shocks that traditional systems miss. This technology is also reaching the public through personalized AI advisors, offering hedge fund-level strategies to individual traders. Retail platforms are integrating complex algorithmic tools, democratizing a market once reserved for the world's largest institutions. The goal for 2025 and beyond is systematic resilience, building systems that are not just fast, but stable and ethically sound. The AI revolution in finance isn't just coming, it's already here. It's a transformation of how we measure value and manage risk. As we move forward, the most competitive firms will be those who can harness this automation while managing the inherent risks. From JP Morgan's LOXM to the democratization of retail trading, AI has become the primary differentiator between leaders and laggards. The only question left is, how will you leverage the power of the machine to navigate the future of finance? The future is now. Are you ready for the shift?